In today's video, I'm going to teach you how to get a loan from Affirm. By the end, you'll understand exactly what Affirm looks at when you apply, so you can prepare and improve your chances of getting approved. First, Affirm evaluates three broad areas: basic eligibility, your individual history, and the store's policies where you're making a purchase. Think of these as the foundation, your personal profile, and the specific checkout rules. Start with eligibility. You need to be a resident of the United States, including U.S. territories. You must be at least 18 years old or 19 if you're a ward of the state in Nebraska. You'll also need a social security number and a phone number that can receive text messages and is registered in the U.S. or its territories. Make sure that number is active and accessible because text verification is commonly used during the application process. If any of this doesn't match your current situation, resolve it before you apply to avoid delays or denials. Next is your individual history. Affirm considers your credit score and your credit utilization, which is the share of your available credit you're using. Lower utilization typically signals more room in your budget. Your payment history with Affirm matters too, including any overdue or deferred payments and any past loan delinquency. A strong on-time payment track record can help. They'll also look at how long you've had your Affirm account and the number of loans you currently have with them. Fewer simultaneous loans and a longer positive history generally look better. The size of the loan you request is another factor. Smaller, more manageable requests can be easier to approve than large ones, especially if you're new to Affirm. Be ready for verification of your income and your current debt obligations. Accurate, up-to-date documentation helps. Recent bankruptcies can weigh heavily, and mismatches in your personal information, like a new address, phone number, or name change not yet reflected in public records, can slow things down. Update your records across your accounts before applying. Finally, store policies play a role. Approval criteria can vary by retailer and can change over time. The interest rates offered at a particular store, along with that store's minimum purchase requirements or maximum allowable loan amounts, can all influence your approval and terms. If one retailer's limits or rates don't fit, another retailer may have different options for the same or similar items. To recap, confirm your basic eligibility, tidy up your personal and credit profile, request a realistic amount, have your documentation ready, and be mindful that store-specific terms can shape the final decision. With these pieces in place, you'll be ready to apply with confidence.